Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to do an update of my State of the Market series. I'm going to run through some of the indexes, weekly and dailies. Then I'm going to run through some of the breadth indicators, see what they're doing. From what I see out there, the market is acting extremely well. At Levitt Brothers, we've had many really good setups to trade over the last couple weeks. We've had some great trades, some really solid profits, and from my standpoint, it looks like the market's it's doing very well. It's healthy. It's moving up, and I think it probably continues. But we don't want to trade what we think. We want to actually have some sort of backing in the charts, in the indicators, and such. All right, so I'm going to run through them, indexes, some breadth indicators, just to get a general idea of what's going on out there. All right, let's get to it. All right, so here is the S&P 500 weekly. What we have here is we have a dip here. We have second dip here, a third dip here, but then we have a very obvious higher low in place, okay? Everyone sees this. I'm not showing you something you haven't already seen. It got rejected by the weekly 50 there. It got rejected by the weekly 50 there, and now the S&P is basically up at that level. It's not right there, but it's about 50 points below that level right now. So higher low is a great sign, right up against the 50-week moving average. So this is where the proverbial rubber meets the road. We'll see if we can get through. Ideally, if the market was strong, if it was healthy, if indeed we're gonna make some headway here, we're gonna have to get above that moving average, push higher, get a little bit of separation from the moving average, and then at some point in time we're gonna come back down and test it, and then move up from there. That's like the ideal case. Okay, so move off the low looks great. Okay, the higher low looks great, but we're not like out in the clear yet where you can close your eyes and just start buying a basket of stocks and assume you're going to make money. Okay, it's just not going to work like that. The market has neutralized, okay, but it hasn't broken out to the upside quite yet. Okay, so I'm going to go over to the NASDAQ now. Note here, just really quickly, how the very obvious higher low is in place here. Okay, now let's go over to the NAS. All right, so the NAS here, you see it didn't make a higher low at all. It made the same low. So we have the same thrust down. We got 1, 2, 3. But whereas the S&P moved up, came down, and did this, you could see what the NASDAQ did. It came, it didn't bounce as much, and it came all the way back down and met its, and basically tested its previous low. So we need better participation in the NASDAQ. Okay, we need more tech stocks. We need semiconductors. We need software. We need more tech stocks to be doing well in order for a bottom to actually be in place. Okay, so if the S&P breaks out here, the S&P can break out and run up for a couple weeks, but the NASDAQ would only move up to its 50-day moving average or 50-week moving average. Okay, so let's not get too excited. Market has improved, but there definitely still is a downtrend in place with the NASDAQ, and we definitely need improvement there among tech stocks. All right, let's zoom in. Now we'll look at the S&P and NASDAQ with the daily time frame. Okay, so here's the daily. So we have a higher high here, but then a lower high here, and we have a lower low here. We have a lower high here, and then we have a higher low there. So it's like the price action is getting compressed. This 3,900 level was key. It's been like support and resistance several times. I don't need to mark it off. All I want to basically point out here is that price is essentially, we're right at 4,000, which is the same thing we were at way back in May. So instead of being in a definite downtrend, the S&P has neutralized. Okay, price overall is getting compressed. The swings are getting smaller. Price is unchanged going back 6-8 months. Things have definitely improved, but this is not bullish. It's just simply less bearish, and all that's happened is that the market has neutralized. So let's be happy. We've had a lot of great long setups. If the market wants to be neutral for a long time, that's a great market to trade. But let's not get too excited about a runaway bull market just yet, because it's not happening. So let's look at the NASDAQ right now. So that is definitely not neutral like the S&P. Over here, the S&P was testing its 200. You can see the NASDAQ didn't even come close. And right now the S&P is up near its 200 again, and the NASDAQ isn't even close. So the NASDAQ is still trending down. We got like a little bit of a possible triple bottom here, but the NASDAQ needs to do better. It needs to participate in order for the entire market to run. So I would say, the S&P has neutralized. The NASDAQ still points down. We need some improvement there. All right, so let's look at some breadth indicators. So this is the S&P 500 up top versus the NYSE advanced decline line. This is the 10-day moving average of the 80 line, 20-day average, and the 50-day average. Just want to point a few things out. We have the print over here is the highest it's been since the market topped, which means this 10 days, let me change the color here just so it'll be easier. This 10 days over here is from an advanced decline standpoint, is the strongest 10 days we've had. Okay, it's stronger than these 10 days. It's stronger than these 10 days. It's stronger than these 10 days. Stronger than these 10 days. These 10 days. These 10 days. It's the strongest 10-day period since the market tops. So that's good. I look over here at the 50-day moving average of the NYSE 80 line. What impresses me, and I'm going to delete this stuff so it'll be easier to read. What impresses me is that we have this dip over here in January, and there was no damage done over here. So that was really good. Instead of dipping down, it just moved sideways, and then in the beginning of the year, it broke out. So that looks good. So everything looks good here. When you get high prints from the AD line, that means a lot of stocks are participating, not many stocks being left behind. This is not a market that's being pulled up by a small number of outperforming stocks that have too much influence. Participation is pretty strong across the board, and that's a good sign. Next chart is the NYSE AD line and the NASDAQ AD line. You can see over November, the NYSE AD line broke out. We came all the way back down into its pattern. Very easily could have just said, oh, that's it, false breakout. But like you can see what's happened over the last 2-3 weeks. It's gone vertical. The NASDAQ AD line tried to break out over here. Then it dropped to a new low, and it too has gone vertical the last 3 weeks. So in both cases, they're at multi-month highs. They're and what's nice here is that the NYSE and the NASDAQ, this is like 99% of all important stocks out there. So these two exchanges collect all the data. It's not like we're just with the S&P 500 or just an index which is very limited or has a small number of stocks. This is like practically every important stock that trades, and we have the advanced decline lines moving basically straight vertical the last 2 to 3 weeks. So participation is very good. Advancers have been dominating decliners. Now let's look at we're going to look at what's called the breadth thrust indicator. So in the last chart, we talked about advancers versus decliners, and what that does is it lets all stocks speak equally. So it doesn't matter if you're like $100 million or $1 trillion, whether you're up or down, you count the same. When you talk about the breadth thrust, it allows the higher volume stocks to do more of the talking. So the bigger companies that have been around, that are more important, that have higher volume, get a bigger say so. So divergences work great with this. You can see the S&P up top here, higher high, lower here. You can see lower low there, but a higher low here and the market reversed, and another lower low here and higher low there and the market reversed, et cetera, et cetera. You can pause the video if you want to see it. Like divergences work really well with this. I want to point out, like right over here, the market was essentially unchanged. It came down and tested its low, but between here and here, which is like between here and here, the breadth thrust very quickly moved up. Okay, so I mean, at Lever Brothers, we saw this. I posted this. This is one of the reasons I turned bullish and posted a handful, quite a few long setups, is because even though the market was trading flat here for nearly 3 weeks, I saw money flowing into advancing issues, and that's why that's why I posted a lot of long setups that have done really well. So now looking out at today, we have like the highest print since August. We know what happened in August. The market topped and went back down, so we got to be on guard. But this is a great sign. Okay, not only are advancers dominating decliners, but advancing volume is dominating too. let's go on. So what we have here is the NASDAQ versus NASDAQ. The green is new highs, the red is new lows, and then the black line below is highs versus lows. A couple things I want to point out. I mean, I could talk for 5 minutes just about this chart. I want to point a few things out. Right over here, the NASDAQ had bottomed and then moved up. And look at new highs. New highs were really high. It was like much higher than over here, much higher than over here. So the NASDAQ had barely moved off its low, just a couple weeks, and new highs had already printed a pretty high level. So that was an indication that like beneath the surface, there was actually some stocks that were starting to push higher, that even though the NASDAQ had fallen a bunch right here, there were a bunch of stocks that resisted falling. And when the NASDAQ bounced, those stocks printed new highs. Next thing I want to point out is right over here, where the NASDAQ had fallen the second half of December. Notice new highs stayed relatively high for, November and December, and when the market fell a bunch at the end of December, new highs actually stayed pretty high. They didn't fall back down. Okay, you can see like the dip over here at the second half of August, where as soon as the market headed down, look at new highs just fell off. Okay, but over here in December, the market headed down, tested its low, but new highs actually stayed pretty high. So that was an indication that even though the index was falling, there was a lot of stocks that were holding up fairly well. Okay. Second thing I want to point out, I'm going to delete those so we can read better. You can see how we got, low here, and we have a high print with new lows and a high print with new lows. Here we had a move down here, but look at the new low print was down here. Okay. So whereas these prints were up here, okay, we had prints from back here over in this area, and yet here the market was down near its lows, had fallen a couple weeks in a row, and new lows ticked up, but they didn't really ramp up really strong. So that told you that even though the market was falling down to its lows or beneath the surface, there was a lot of stocks resisting the downward pull. Okay, and then you come all the way till today. We have we have a 1 week bounce off the low, and we have, new highs are taking their highest level in an entire year. New lows are down at a really low level, and then the high low over here is at its highest level. So new highs versus new lows looks incredibly strong here. Not just right now, but over the last 2 months, it looks really strong. Okay, last chart here, S&P 500 versus the percentage of S&P 500 stocks above their 20-day moving average, which is in the middle, and 50-day moving average, which is down below. So point out a couple things. In an uptrend like this, notice how like right here and right here, we have most of the stocks. The middle of this is 50%. Okay, so when the market is trending up and it's strong and it's healthy and it's moving up, you get most of this, most of the time you get more than 50% of the stocks are above their 20 and 50-day moving averages, okay, with an occasional dip below, okay? We got to, move higher, and then there's a little bit of a break and a move higher and a little bit of a break. That's how the indicator works. Then notice as we get into like late summer, fall, winter last year, notice how the range here and here dropped, and instead of being mostly above 50%, now it's straddling 50%. So that told you that even though the market was continuing to move up over here, we were being warned that something was beneath the surface. Something was changing. Then we get into the right side of the chart here where the market is trending down, and we still get these bigger swings above and below 50%. Okay, so if we want to know, I'm going to delete this stuff. So if we want to know if the market is going to trend up over here, we want these indicators to act more like this, okay, where it rotates up and down, mostly above 50% with an occasional break below. We want it to act more like this and less like this, where you have big swings in both directions. Okay, so that's what we want to look for here. This over here is a great sign. Okay, but we want going forward, we want this to, do this with occasional drop below and something like that. Okay, that's what we want going forward. All right, so overall, the S&P has neutralized. The NASDAQ is still pointing down. Breadth has improved significantly. And then, of course, the number one indicator you have is just like how many good setups do you have. If you look at 500 charts, and you have a hard time narrowing down your list because there's so many good stocks to trade, that's the best indicator you have. And over the last 2 weeks, we've had many, many, many good setups. A lot of them have run up quite a bunch. They need to rest. They need to do some backing and filling. But if you judge the market based on that, this is probably the best the market has acted at least since August, and probably since the end of 2021. So I think it has legs. We're probably going to continue up. We need to rest and take a break. But market is strong. It's not strong, but it's acting much better now, and you should definitely have more exposure and be taking advantage of this. All right, hope you got something out of it, and I'll see you next time.